Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our trading room recording on Tuesday, the 13th of July, 2021. Didn't do a recording yesterday, guys, because I forgot to say to you on Friday that yesterday was a public holiday here in Northern Ireland. Today is as well, by the way, but I just thought, let's get on with it, Right, so let's have a little overview of what's going on, try and get up to date, see if we can find any opportunities to develop over the coming days and weeks. And from that, we'll decide what we're going to trade and what we're not going to trade. Okay, let's just start with, today we've got inflation rate in Germany, and we've got core inflation rate and inflation rate in the United States. This is potentially, this could move the dollar, guys, DXY. Forecast 4.9 and the core inflation forecast 4%. Obviously, those numbers are way above the Fed's target of 2%, but they did say they'd allow it to run. And the big debate at the moment is, obviously, there's base rate effects come in. You know, what will we run that this time last year? Because this is year on year, remember. And also we've got to take into account what the Fed are saying is transitory inflation, things that have been pushed up just because of the situation we're in, because of shortage of supply, because of problems of transporting things. We saw lumber going up. We saw, lots of other commodities going up. Lumber's just the one that sticks in my head. Copper went way up. But those are starting to come off again, guys. I believe there is, I believe inflation is probably going to be higher than what the Fed thinks it is. And I think the market believes that as well. But these things, they take time, guys. It isn't going to be today that all of a sudden the dollar takes off long if these numbers come in higher. Although it could push up longer today if these numbers come in higher, or it could fall. Now, I would love these numbers to come in lower, and I'll tell you why. Because currently, and we'll look at the chart in a moment, guys, currently there's a bit of an ending diagonal on DXY. And they don't always come off, but there's a high probability that when you get an ending diagonal set up, that you will get a retracement of the move up. And often it's 50%, guys. And if you're looking for a reason for either continued trend down, then that would be a good entry point. But if you think trend's going to go up and you've ending diagonal, well, usually I don't trade them, guys, but I'm going to trade this one. I'll explain it a bit more in a moment when we go over and look at the DXY chart. But the reason I'm talking about it is because we have this inflation information coming out today. Let's move on to the next 7 days. Well, we'll just cover this week. Westpac consumer confidence in Australia, interest rate decision in New Zealand. Obviously, they'll probably not move it, but yet again, what we're doing at the minute is we're listening to what the central banks have to say and trying to judge when they will move, because the market will always move long before the whatever's going to happen happens. The market predicts what's going to happen, or should I say, it tries to predict what's going to happen. And then we've got UK inflation rate as well. Tomorrow it's going to be a busy week, guys. Forecast 2%. Let's see how that comes in. Personally, I think it's going to be higher than that just by go to the supermarket, go for a pint of beer, guys, and inflation's way above 2%. Obviously, there's more than that to inflation, but still, petrol, go and try and buy petrol. It's easy up by 10% in the last few months, guys. So I imagine that could come in, which may well push the pound up yet again, because the Bank of England will have to do something about it if it starts to overheat. Now, what their policy is, to be honest, off the top of my head, I don't know, but over the coming days and weeks and months, we'll find it out. Hopefully before tomorrow. The point I'm making there is that when we don't know something, we accept that we don't know it, and then we go and find out. The reason why I say over the coming days, weeks, and months, because sometimes when we go through these on a daily basis. Sometimes there's things that you've all the good intentions of finding out, but when you get into the day, there's more important things going on, and it kind of slips your mind, So generally what I do is just write things down. Just go BOE policy. And hopefully I'll remember to do that before tomorrow. Okay. And then there's their interest. Oh, that's the Bank of Canada, BOC, interest rate decision. So there's a lot happening this week, folks. Employment and unemployment in Australia, yet again, that will affect how people see the Australian dollar. Remembering that we have an interest rate decision on the New Zealand as well, and I like trading the New Zealand or for the Aussie New Zealand, but I haven't traded it recently because I'm a little bit unsure what's going on with it. It's been difficult with currencies this year, guys, and I'll tell you why. Because often what you do with a currency is, from a fundamental point of view, you kind of just look at which one's got the higher interest rate, and or looks like they're going to increase their interest rate or decrease their interest rate, and that gives you a nod to which direction it's going to go in. And then you look technically for your setups. But at the moment, because everybody's in the same boat, everybody's spending money hand over fist. When I say everybody, I mean every national bank or central bank. Everyone's sitting on 0 or 0.25%. So it's been a race to the bottom. And then you've got to look for other reasons why something will move in one direction or another. So it hasn't been great for currency trading, certainly since the start of 2021. Last year was a bit easier because we had the big move up or down, depending on which currency you're talking about, coming into the pandemic. But then, because they were all overbought or oversold, then you could say, okay, well, from here, we're going to trade it down or we're going to trade it up. But since the start of this year, it's kind of been, they've come back up and the other ones have come down, and we're all sitting in this sort of zone of nobody knows where anything's going. So it's a little bit tougher at the minute, guys. But, when you don't know where currencies are going, go and trade stocks. When you don't know where stocks are going, go and trade currencies or commodities or whatever, guys. Just trade what you know, guys. Okay, so 16th, which is going to be Wednesday, Thursday, Friday, Bank of Japan interest rate decision, quarterly outlook report. They'll not move from there. They've been stuck there for years, guys. But yet again, we were looking for the yen to get a bit of a boost last week. Bit of a move to safety when you see stock prices dropping. At the minute, I'm 90%, maybe even above stocks. So obviously, I don't want to see the stocks dropping. But if they do, then maybe we jump into one of the safety currencies like the Swiss or the yen, and usually the dollar. But I don't know what the dollar's going to do at the minute, guys. We're just trading it flat. But within the flat, we've got half decent opportunities to trade it up or down. And then retail sales and the Michigan consumer sentiment. That's always the last thing on a Friday afternoon for us, guys. Okay, so there's a lot to look at this week. So let's get on with it. Let's go over to here. We're not doing the news stories. I usually do news stories, but I find that it's taking it's making this far too long. So I'll do those in separate videos and maybe individual news stories as part of, when we're looking at an individual stock and we do a little video about that. We'll pick out the individual news story where the stock was brought to our attention, and then we'll do, a dive through the fundamentals out the other end, look at the technicals, and then make a decision whether we're going to trade it or not. And I'll do those hopefully daily, guys. But I might put those in Patreon, but we'll see. For now, everything's going to be on YouTube. Okay, so let's get over to here. We'll start with the Nasdaq. We'll work our way down. So the Nasdaq's moved up yesterday. Not according to my account, because my account went in the red yesterday. There's just one currency trade saved me, but we'll talk about that in a minute. Yeah, I'm a little bit, if this is going to continue to go up, I'm a little bit underexposed to the Nasdaq now because I was a little bit overexposed to it, so I dumped a lot of it. When I say I dumped it, what I mean is that I've been taking, recently I've been taking 5%. In fact, when I say recently, the whole of the year, I've been taking 5%. If you get a 5% markup, I've been taking it. And the reason I've been doing that is because they are really, really overpriced at the minute, guys. The price to earnings ratios are enormous. And at some point, you're waking up and the market will have decided today's the day we're going to correct. And you really don't want to, well, you can't avoid being caught up in it, guys. But what I'm trying to do is limit my downside risk by trading very conservatively. So if I get 5%, I'm taking it off the table, guys. And therefore it's locked up in the account. But what I haven't been doing the last few weeks because I've been off is I haven't been replacing the ones that hit the 5%. You know, I haven't been doing research, finding which new stocks to get into, because usually, you know, you sell one, you buy one, you sell one, you buy one. But I haven't been doing that, so my exposure to the Nasdaq's low at the minute, which is a good thing if we get this correction. Not expecting that, but for anyone who doesn't know, that's just a copy of what went on over here. Because when we got to this point, we were a little bit unsure whether this was going to be a deeper correction or not. But when it started to move like this, I copied that and said, listen, I think this is what we're going to get over the coming weeks. In other words, price is going to continue up. It's going to break the top and it will continue up like this. And at some point, it'll correct again, guys, as they always do. They'll run and then they'll correct. They'll run, they'll correct. They'll run and then they'll correct. Oh, let me just move this out of the way. Okay, so we will get a correction. Right, let's just put that to one side for the moment. So it's moving up, seems to be moving up today, which is a good thing for anyone heavily invested in the Nasdaq. I've covered myself a lot, guys. I said this last week. I bought a lot of gold, not gold itself, but gold miners, and a couple of GDS, a couple of ETFs, GDX and GDXJ, which haven't been doing me any favors in the last few weeks. In actual fact, they've held the account back. Because any money I'm making, it's being offset by those dropping, but that's okay because they will come good again. And when they come good, then we'll get that boost. So rather than having a nice steady, what we're aiming for, say 2% a month across the board, what you get is maybe a month in the red, but the next month's 3% up or 3.5% up. So it might balance out like that. Well, that's what I'm hoping for anyway. Okay. Dow Jones, same thing, continuing on up, coming into a little double top there. So often you'll get a little reaction off that before it goes. But nothing to write home about there. We're still in an upward trend. There again, the S&P 500, upward trend. Nikkei still in this correction. But provided the markets continue up, then we have been looking for a breakout here. And anytime you see a whole load of those, it's just me day after day, saying, yep, long. And then I forget to clear them off. UK index. Now, UK have made an announcement that, well, not the whole of UK, but England, which is the big part, it's the main part, despite all the moaning, the groaning, the Scots and the Irish, and sometimes the Welsh. England's the big bit. It's the one that makes all the money. Although none of the nationals will ever admit that, but there you go. England makes all the money. So England is, from the 19th, all lockdown rules are being lifted. They may keep the one where you've got to wear a mask indoors, but there's a debate going on about that, whether they're going to keep that or not. That should be good for the stock market. Now, the thing with this market is these are multinational companies, guys. Most of the money that these companies make isn't even made in the UK. But nonetheless, the perception is it's UK. UK's locked down. Therefore, things are held back because of lockdowns and one thing and another. And if you look at this, the UK index hasn't even made it back to where it was before the big drop last year, guys. So there is upside to this. These are still undervalued. Now, part of the reason they're undervalued is that they're not trendy. The companies that are in here, they're not trendy. They're good old-fashioned value stocks, guys. Big companies, the likes of, BP, Royal Dutch Shell, insurance companies, banking companies. That's what you're getting in the UK index, guys. Part of the reason that the Nasdaq has gone so high is because it's highly weighted in tech stocks, and the tech stocks are ridiculously overvalued, guys. And if you want to know what the value of something is, you just got to go and let's say Tesla. I don't even know if Tesla will have a PE. And just go into stats there. Yeah, look at their price to earnings ratio, 686. You're really looking for 20. 686, and then people will go, yeah, but Steve, it's growth. Well, you're already paying for the growth. It's like saying, well, buy this house because in 20 years' time it'll be double the value or 3 times about whatever you think it might be. But don't buy it at 3 times the value. Don't pay for it now at the value you think it's going to be at in 20 years' time. Don't do that with a company either, guys. Don't buy a company now when its price is already showing you what they think it's going to be in 5 or 10 years' time. Why would you do that? Unless you're trading it technically, which is a different thing altogether. But there you go. Earnings per share, $1, more or less. Market cap, 660 billion. Revenue, 35. I mean, are you mad? Are you mad? That's not even earnings. That's just the revenue, guys. Anyway, that's another story. We'll talk about that when we're doing our individual stocks. French pushed on up. Yeah, Europe's starting to recover. I think that'll continue on up. Germany will look the same. Yeah, a little bit of a breakout there going on in Germany. Well, what we were saying the other day, it'd be nice to see a nice correction because that would give you a good point to get in if you wanted to trade this. By the way, I don't trade the indexes for anyone that's new. We just use these indexes to give us an idea of what's going on and try to, find little places where you go, do you know what, at the minute I'm going to be a little bit conservative because it looks like it could be a correction coming up. And then at other times we have a correction, that's where we go, hey, you know what, let's get back into this. China. Now, what we've been saying about China ever since we got this, we're saying that, from here, I said it, would not be surprised if you got another leg down. And that's technical, guys. It's a zigzag. Now, it doesn't mean you're going to get it. Doesn't mean you have to get it. But when you see something like that, it's not really something you want to be getting involved in. Any chart, not just this China chart, any chart where you see that, because often you'll get the next leg down. And sometimes it won't happen when you think it's going to happen. It'll happen a little bit later on. And then off you go again. Do I know that that's going to happen? No, I don't. Nobody does. But what we do is we say, if that were to happen, that would be a good place to start looking for individual stocks within the Chinese market. And you do that over and over again with charts, guys, where you see potential structures and you say, well, if it got to there, I'd be interested in getting involved. Aussie 200's running flat, will probably break out if you look at what happened over here, guys. And then you had this nice move up. And then the Russell. Now, the Russell last Friday, can't remember what I was talking about there, guys. There was a lot of talk on Friday about the Was this Friday? The 9th of July? Yeah, that was Friday, guys. It is this nice push up in the Russell, but it's still within this flat movement here, guys. It's been running flat for months. We'll have to see what happens with the dollar and the Fed. This is US small caps, by the way. Now, I don't have any because I don't think eToro have any, because the only account I talk about is the only one of my accounts that I talk about is the eToro account, guys, because it's all public anyway. So I don't mind showing you what's going on in there. Yeah, so I don't have any of these, but you can see it's been running flat. There are downside risks, obviously, or headwinds as they call them. There's potential tax hikes to pay for Biden's, his spending spree that he wants to do, infrastructure spending. And there's potential interest rate hikes going to come if inflation gets too high. Fed said they're not going to do that until they see employment down to decent numbers. What that is, I'm not entirely sure how low it is, but at the minute, well, the last time I looked, it was about 10 million, and they wanted to get it down a bit. So we'll have to see, but potentially there could be a bit of downside to this, guys. But I would look at the individual stocks if you can. If you're in the States and you can trade these, then look at the individual stocks. Now, DXY. This is probably the most important currency. Well, not probably the most. This is the most important currency chart there is to look at, guys. Because if you can work out, or we can work out what's going on with DXY, it gives you a nod to a whole host of other currency pairs, all of the majors, and I would also argue all of the European currency pairs as well, because the euro usually goes in the opposite direction to DXY. So if we know where DXY is going, we've got a nod to all of those currency pairs, guys. And that's why it's so important. And you'll hear me talking more about this than any other chart. I'll just repeat what we've been talking about for the last lot of weeks. We got this ending diagonal here. And I'll be honest, from here, I was looking for the dollar to move back up and maybe give us a double top there. At the moment, we're not expecting it to go up into this territory. And the reason for that is that on the one hand, we've got talk about whether the inflation's transitory or not. If it isn't transitory, then the Fed are going to have to taper their bond buying and their stock buying sooner rather than later, which means that, they're tightening monetary policy, which is hawkish, which makes the dollar go up. And also then they would have to bring forward the planned hikes from maybe 2022 or 23 to 22. In other words, next year they could start hiking. And of course, the chart will move before any of that happens. So it's all about the prediction of what's happening. But the other side of that argument is that they've been printing money like Billy O. They may well continue to print money if the inflation figures don't continue to run hot. And also this Biden, I don't know what it ended up at, guys, but 1.8 trillion they were talking about at one point. This infrastructure plan, which, okay, it's going to be over the next, I think it's over the next 8 years are planned to do it. But nonetheless, it's a lot of money being spent by the government. It's a lot of money being printed by the Fed. And, there's definite downside risks to the dollar. So what's the market think of all that? Well, you can see what the market thinks. If we go out to the daily time scale, by the way, I predicted this more or less from a way back here. Not exactly, but if you took this out to a weekly time scale from back here, I said we'd get one down, one up, and one down. Now, it's a lot harder to trade it than just draw it, but we did predict that way back in 2016, 17. In fact, that particular day there is when the day I predicted that. I think on the 4 hour, if we can get it up. And for those of you who've been with me for ever since, I'm sorry I keep talking about it, but it was a pretty good prediction. And fourth wave correction almost complete. We predicted it down. Dollar forecast index short from there. And from here, we were calling it long, etc., etc. And we did videos on it and all the rest of it. The one thing we didn't get in it was we were thinking it would be a little bit more impulsive and a little bit sooner. And that's the thing about it is, guys, often you'll get the analysis correct, but the timing of it incorrect. So the timing of it was, it basically took a year longer than what I expected. But once we got to here, we said, okay, we're off to the races, and down we came. And that was relatively easy trading. It was just dollar short, until we got to this point. And then we said, okay. And that was the start of 2021, guys. And this is the point where the market's not sure. It's that balance that we were talking about between Fed potentially tightening and the government spending. And the Fed won't tighten until they see inflation. Well, they've been calling it transitory, guys. But once they start thinking it's not transitory, that's when they'll start talking about tightening, and that's when the dollar will go up. But guys, I'm not expecting the dollar to come back up to here. Maybe it comes back up into this level, but it could just as easily drop down to here. And that's a long way on a 4-hour time scale, guys. Okay. So at the moment, as in the last 6 months, nobody knows. Now, we did trade this up. We got it wrong from here because I was expecting this to go long here. Didn't lose any money on it. I just didn't trade it because I was waiting for the start of the move up. But then we got this ending diagonal, and from there I started trying to trade it long in here. But unfortunately, the way it moved, we got this and then back down, stopped out. I can't remember. Well, was it here and stopped out and then here? A couple of times I got stopped out on it. And then I just thought, this isn't going to work out. And work out, what I meant there was this ending diagonal. Do you see it there, guys? Because when you get an ending diagonal, just trying to draw it there, bump, 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 you'll often get at least a 50% retracement of the whole move down. And in this case, the whole move down was from there. I'll not measure it, guys, because this is really looking a bit clumsy. But that was the impulse, and then you get your ending diagonal, and then at least a 50% retracement. You can see there that that's more than a 50% retracement back up. Unfortunately, it didn't catch it. The reason it moved there was because, was it inflation last week? Or 2-3 weeks ago, should I say? Was running a little bit hot, and the Fed were a little bit less dovish. They didn't say they were going to change anything. They were just a little bit less dovish. And on that day, it shot up like a rocket. But since then, we've had the reverse of that. And yet again, look at the diversion between there. Prices moving long. Momentum moving short. When you get that diversion and you get 1, 2, 3, often you'll get that 50% retracement. Now that's probably an exaggeration because 50% will have to move from there or measure from there. So you could at least get a move down into there. Now, if we think that this is going to move back to the bottom, in other words, it's going to stay in this range, or even better, if we think that that we're going to get a breakout short, which I don't know at the minute, guys, then this could be the start of a really good move down into that area there, guys. I don't know if that's what it is or not, but it will take it months to get there anyway. So I've decided to try and trade this short. Can I be wrong? Yes, of course I can. These things don't always work out, guys. But for that reason, then you need to trade it in a way that if you are wrong, it doesn't lose you a lot of money. And if you are right, it'll make some money, but it's not going to change your life, guys. If you're trading in such a way that any individual trade is going to change your life, then you're not being trading for long, because you only have to get it wrong 2 or 3 times to blow your account. And that's not what we're here for, guys. We're here to stay in the game and to slowly but surely accumulate wealth. Okay, so at the minute it's pushing up, and I hate it when it moves in the wrong direction, but unfortunately that's the way currencies, all charts move. They move in the sawtooth manner. At the moment it's pushing up. I'm going to hang on and be brave and hope to see that nice move there, guys. Okay, so if that happens, then what will happen with these? Well, you'll get that trade. And of course, the safe bet would be to not trade the ending diagonal, but let it happen, find out the reasons why it's happened, and then if you get another setup, try and trade it further up. You need a lot of patience for that, guys. But for me, if that diagonal, ending diagonal comes off, and by the way, it could happen today if those inflation numbers come in lower. But if the inflation numbers come in higher, it'll go off in the opposite direction, guys. So just be aware of that before you decide to trade it. So, but look at the divergence yet again in there, guys, from that move down to what's been happening here. That's not a beautiful ending diagonal, but nonetheless, look at the divergence. Looks like it wants to go long, guys. Pound. I traded this over the weekend. No, not over the weekend. It must have been Friday. Or was it yesterday? I think I traded this yesterday. I made a mistake, guys. And I say this all the time. Don't trade on your phone, because you'll make mistakes on your phone. If you're a muppet like me, maybe you're okay. But I make mistakes when I trade on my phone. And mistakes cost you money, guys. Now, fortunately, yesterday, the mistake I made me money. And what I did was I traded the pound dollar long, and it went long. Let me just see the timing of this. 9th, yeah, it must have been that little move there, guys. And it went long. But what I found out was that, we're on 4 hours here, so that's why it doesn't look very big. Do you know what? It might just have been that move. So I'm glad I closed it. It was that move there, guys. And I made 10%. And the reason I made 10% in that was because when I opened, normally I would take the maximum of 10 times leverage on currency pairs, guys, with a stock one, because you're going to be holding on to this stock for much longer. 10 times leverage. But when you go into the system and eToro, it starts on 30 and you've got to change it to 10. But I opened this trade on the phone, didn't check it, and I put it in at times 30. And I came back about an hour later and was up 10%. And I just went, you know what, I'm taking that. So I closed it. And as I closed it, I realised, my goodness, I was on times 30. Now you say, well, that's a good thing, but what would have happened had it gone the wrong direction, guys? It would have been 10% down within an hour, and that's no good. You don't want to be trading like that. So that was a nice wee accident, but the moral of it is to be careful about trading on mobile devices, guys. Get down, sit in front of your laptop, sit in front of your desktop that I have set up here, and make sure that everything's right before you press that buy or sell button, guys. Okay, so what's going to happen next? Well, we'll take this out to 4 hours. There's a couple of things here. First of all, with this talk about the UK opening up again fully on the 19th. Sorry, England opening up again on the 19th. By the way, the other nations will follow England. The only reason they don't follow them directly is because they want to look as if they're independent. You know, the powers that be within them, their little governments within Scotland, Northern Ireland and Wales, they always like to let their voters know that they're in charge and they're not just following England, which is BS, we know it. But there you go. So England's fully opening up from the 19th. the rest of the country will fully open up from the 27th or something. They'll give it 10 days, and then they'll go, oh, yeah, our numbers say, let's do this. I'm a cynic, guys. You might have noticed. I like the truth. And when do you ever get truth out of politicians? Okay. So the point we're making here is that we could well see a boost on the pound, which then depends back to DXY, which shows the reason why DXY is so important. If DXY falls today, then this will be a good trade. If it doesn't, well, keep your stop losses tight. And that's what it would do today, guys. If you're planning to try and trade one of these, get your stop loss in there. So if you're wrong, you're not going to lose very much. So yet again, potentially long there. Now, I hope tomorrow we come in and some of these have happened, guys, rather than going the other way. But yet again, you're talking about one or two trades here, guys. You're not talking about putting half your account on this. One or two, 2% trades, something like that, 2% position sizes. That's all we're talking about here, guys. We're not talking about putting your shirt on it. US CAD, a little bit different with a CAD at the minute because the oil price dropped away over the weekend there, towards the end of last week. Let's have a look at the oil price. Oh, it's come back a little bit. It just suppressed the CAD a little bit last week. But listen, if DXY drops, this will drop. I just don't know if it's going to be the best trade. That's the point I'm making. This one usually is quite good, guys. If we get the drawdown, then there'll be a nice trade in there. The yen, now, what we were looking for in the yen the other day was another leg down. Let's clear that out a little bit. So there could well be a move there, which makes me want to go back to here. You see, that's potentially setting up to go again, guys. Not saying it's going to, but it's certainly... you see, from here, I've been looking for this to go long. And what they often do is they'll go long, they'll drop, they'll go up, they'll drop, they'll go up, they'll drop, and then they go. So this hasn't exactly copied that, but it's gone up, it's dropped. Now, the fact that it broke that bottom concerns me a little bit. There isn't any great momentum in it here, is there? Look at that coming down there. So even though it's dropped from there to there, look at the strength of the drop, guys. And then we've broken out there. And is that a potential little pullback ready to go? We'll have to see. What would happen if those inflation numbers were higher today in the US? Would there be a move to safety? Potentially out of stocks. And then maybe into the yen, maybe into the Swiss. Just something to think about there. But unfortunately also the dollar would go long if the inflation figures were high. But there's always another trade. That's the point we're making here. China. Look. It's not beautiful. Ordinarily, you're looking for something that looks a bit like that, but that one's a little bit low. So it's not beautiful, but if the DXY were to go short, then you would get a trade down there. Oh, look at that one. That one's already started moving, guys. Look at it. See that ending diagonal there? That one that didn't even get a chance to break the top. See it? The divergence. Massive impulse drops off. Another impulse breaks the top. Drops off, and then usually you get the last one just breaking the top, but it doesn't always, and then off it goes, guys. What we don't know is that the done deal? Has it already happened? Not so sure. I wouldn't say so. I would say there's more downside to that, guys. Gold. Ooh, it's holding its own at the moment, running flat. If the dollar drops, this will go long, and vice versa. Silver running flat. Looks like it wants to drop yet again. Why? Because of the technical, guys. It looks like it wants to do that. It doesn't have to, and I hope it doesn't, but I wouldn't bet against it, you know. And the same with gold over there, guys. I say I wouldn't bet against it, but I already have bet against it. But I won't be putting any more money in against it. That's what I'm saying. Because I would not be surprised if you got another leg down there. And that's really going to stock my statistics up for July. But there you go. If we were to get that, obviously you buy back into gold from down there, guys. Bitcoin, I think it's only going one place, guys, at the minute. It's going to continue to drop. But if it gets down around 20,000, maybe even 25,000, a little range down there, and maybe start accumulating for the next run up, which could take to the end of the year. I don't know. It could be tomorrow it goes up. Could be the end of the year. If you go and look at the last time it spiked up and then dropped, how long was it? I don't know because I wasn't trading Bitcoin back then. It was a long time. Between there and there, I said it started coming up around there. 458 days. And then between there and say the bottom there, 260 days. This could well be still on its way down. If you were to measure that come back down, looks like about 80%. That one come down. Well, if you're going to measure them there, it was near enough 100%. This currently looks around 50. Is it 50%? Anyone that trades this will probably know off the top of their heads, guys, but I dabble in it now and again, but let's measure from there up. Yeah, it's around 50%. So there could well be more downside to this, maybe down into 78, where that would be 60, say 20,000. Say 65%, somewhere around there. Now, it has been close to the 61, so you could use that argument that it's reached 61, it's on its way up, but I don't think so, guys. If you're trading it, then just accumulate, buy a little bit in around here. If it drops, buy a little bit more. It drops, buy a little bit more, and then reap your reward as it comes up. If it goes up from here, fair enough, but you got to then be prepared that it could drop way down, and therefore don't be putting 50% of your account into it. 5% maybe. If that's what you want to do. Certainly no, I wouldn't put 5% in, but if it's what you want to do, 5%, maybe 1-2% of it drops, another 1 or 2% of it drops, another 1 or 2, and then when it comes back up, fantastic. Oil. Well, there's oil on the daily, guys. It's right up to where it had been before. There was the drop. So I imagine from here it'll probably run flat, guys. Euro CAD. Yet again, a lot of this will depend on the dollar. If the dollar goes long, this will probably go short. And if the dollar goes short, this will probably go long. No, vice versa. Because it's the euros on that side of it. If the dollar goes long, this will go short. If the dollar goes short, this will go long. Still the importance of knowing where DXY is going. I don't particularly like betting against the CAD, guys, so maybe it breaks out long. I'll not be trying to trade that. Let's just run through these. Euro was, if it dropped back down into that range, I'd maybe try to trade it up. Euro New Zealand. What's going on in there? It's it's a mess. It's one of those things that you could probably trade it with small trades. Each time it drops, be patient. When it runs up, take your profit. Wait for it to drop. When it runs up, take your profit. If we'd have done that last week or the week before, we'd have done all right. Take your profit and then wait to see if it comes down again, guys. Euro yen. Well, yet again, if a dollar goes short, this can potentially go long. Euro Swiss. But if you look at that, impulse, massive big correction, technically you'd be looking for that. Are you brave enough to jump in down there? Pound, CAD. I would like to see some sort of setup here, guys. As I said, if the pound gets a boost of their opening up, then then this potentially could go long. But I don't like betting against the CAD. The Aussie. Well, what happens if you look at what it's been doing so far, guys? Don't reinvent the wheel. It's been going up like that. If it breaks out, fantastic. But don't be jumping into it up there, guys. If it falls down again, there's a place to get involved in it. And the New Zealand will be the same. If it drops back down. Now, the last time, I talked about this on Friday, this alarm was running down across there. And if you go back to, when was this? June, mid-June. At that point, I would have been drawing. Let's clean this up, folks. I explain a lot in here every day, guys. If you've heard it all before because you've been listening to me for a long time, then, you're just going to have to jump through, because we go through all of the charts every day in the same order, folks. So if you want to know about the Aussie New Zealand, for example, just flip through the recording till you hear me talking about the pound yen or the Aussie CAD, to go backwards a little bit, guys. When we were here, when we got this, I drew that back into trend and then drew that. Not mean it's going to definitely do that and go to there, but just meaning that's where the next trade is. The next trade's up now, and that's what we've got. What would I say from here? Well, if I'd have got that trade, which I didn't, but if I'd have got that trade, I'd have taken my profit by now, guys. Remember, we're on 4 hours here. Now, I don't talk about pips, because pips to me is just nonsense. It's about percentage of your account that you're dealing with, guys, or percentage of your position size you're trying to make. Because percentage is off real money. Pips means nothing. To me, it means nothing. But if you use pips, then, let's say you get in there and you get out there, there's 300 pips there, guys. Okay. So that's a good trade for me. Right. What do you do next? Well, it could do that, but we don't know that it's going to do that. So I would say, well, if it comes down to there, then we trade it up again. Unless something's changed on the way down that makes us think that the trend is changing. But at the moment, with no indication that the trend has changed. And so far, it's every time it drops, it goes long. Every time it drops, it goes long. That's what it's done for months now, guys. From way back here, which was December last year, guys. Pound Swiss, running flat. Now, there's a bit of a danger with this one, in that structurally we've had that. You wouldn't be surprised if you got another one down. Doesn't mean you're definitely going to get it, but because of that threat, I wouldn't want to try and trade this long. So with the other ones, a lot of them, you're kind of saying, well, let's go back and look at it. You're kind of saying, well, if you got a setup, you'd maybe trade that long. The same with this. If it were to drop a little bit, you'd try and trade it long. And the thing is, these could push on up. So if you're in them and you want to stay in them, put your stop to 0 and then see what you get. But with that Swiss, there is the danger, just from a technical point of view, never mind the fundamentals, that this could drop down into there. Now, if it did drop down into there, that would be a time to look to trade it up. Pound euro, look at it. Next time it drops there, try and trade it back up. Pound yen. I'm a little bit wary with this one as well as with the Swiss, and that is if there's a downside risk to the stock markets, then these will get a boost. So maybe you leave those alone. Aussie yen, and it's probably the same with that, guys. It's come a long way up. Maybe it needs to correct a bit more, but I wouldn't want to try and trade that down. Once it gets down, if it gets down to there or there, then maybe look to trade it up. Now, what we need to do with this is we've got to keep an eye on the news. Where are we? Where's our economic news? So today, we've got nothing. Where are we? 14th, Bastille Day, which is tomorrow. Consumer confidence, interest rate decision. These will, and then later on in the week, we've got employment and unemployment in Australia. We've got inflation rate in New Zealand. I don't know what those are going to come out at, guys. But if there's any surprises, then we will get a movement on this. Which direction? I've no idea. But the reason that I mention it is that if you're going to pick a direction on this, you've got to be very careful, because when that information's coming out, you're either going to be right or you're going to be wrong. So you'll either get a nice boost to your trade, or you'll very quickly go into the red. So what I'm saying is, if you're going to trade it, get a tight stop loss, guys. Don't risk too much on it. Technically, it looks like it's on the way up again, guys. But that's a big question mark. Now, I do like trading this pair, but at the minute I'm just a little bit unsure about it. Maybe we'll know something a bit more tomorrow, folks. Aussie Swiss. Whoa. Potentially. Potentially it's come into the bottom of that channel, and it could be on its way up again. But if you look at how it's been moving a long time now, if you try to say it, you get in there, impulse, pull back, started to break out, and you got involved there. If you didn't get out again back there for a zero, you're going to have been stuck in this for weeks, guys. So let's wait for some fundamental news before we try and trade this technically, because technically it looks like it wants to go long. It's come back down. Well, it hasn't come back down that much. Depends whether you see that as a 3 or whether it's going to be a 5. $146 days. 136 days. So they're pretty similar from a time point of view. It's just an idea, guys. Is it going to break out, come long, maybe even break the top, given there's a 1, 2, 3, 4, 5? It's an idea. Aussie CAD. I was too chicken to trade this, but you see what we're dealing with there, guys. We got that impulse, it pulled back, and it was so obvious it was going to drop again, but I chickened out of it, didn't trade it. So what next? Well, it's running flat. Fundamentally, I don't know, but technically it looks like it wants to break out long and could move into that area. but I don't know from a fundamental point of view at the minute, guys. They're both pretty commodity-driven currencies. Although Australia isn't driven by oil, obviously, but it's iron ore and that type of thing, gold and coal. Swiss yen, could just end up running flat, guys, which means anytime it drops, trade it long. Anytime it's long, trade it short. I'm not going to trade it, but I'm a little bit wary of that impulse there, because you could end up with another one. So having said that, maybe you try and trade it short, but you might have to hold your breath for a while before anything actually happens. CAD Swiss, it's come back to the bottom of this range, if that's what it is, and therefore, as I said the other day, potentially you could trade it back up. I'm not convinced by it at the minute. CAD Yen, same thing, guys. It's dropped off. Potentially you could be trading it back up. We have to build a picture in these, guys, and you don't always know all the time what's going on. But and because I've had a break for a few weeks, I don't want to turn around and say, hey, that's going to do that, because I don't know. I'm not sure. I'm not even sure enough to say I think it's going to go that way. Do you know what I mean? So it gives us a chance to build up our ideas on this. And the same with that. I mean, where's that going? It's running flat, but it's a potential head and shoulders, maybe. No, wouldn't say so. New Zealand CAD, running flat. Potentially it's going to break out. New Zealand Swiss, yet again, if it's going to break out of that, then this might be a good place to get it long. I'm not convinced. Okay, that's all of that. Quick look at the account over here, guys. Just shows you what's public anyway. We're down 0.2% for July, and we're mid-July. July hasn't been good, guys, but I have been rescuing a lot of things. You know, if we go over to portfolio, and these are the things that have been closing. That's the portfolio at the minute. It's pretty, look, a lot of stuff in the red. But generally speaking, you'll never see a lot of green in my account anyway. The way we're trading at the minute, guys, because anytime we get 5%, we're taking it. Now, I know Sony's a bit over 5%, and I haven't taken it yet. But when I looked at Sony's chart, I thought there was a bit more upside to it, so maybe run a bit of risk with that. Stop loss to 0. But if we go to history here, there was our pound trade, guys. How long was in it for? 12:22 to 15:45. So 3 hours 20 minutes, we made 10%. If you look at the actual, I think does this show you the chart? No, it doesn't. But we're doing okay, you know, 98% profitable. Our drawdown's not that, it's not too bad at all. If we go over here and look at our statistics, maximum drawdown for a year, 5%, 3% for the week. I don't actually know when they happened, guys. It could have been, I think, with a bad month of September last year, didn't we? September, yeah. Must have been there. Because it won't include anything right back here. March last year was their worst. You remember when everything dropped like a stone, guys. And to be honest, I didn't actually get caught out in the start of it. I got caught out because I tried to jump in, trade oil, and something or other else. You know, because I tried to pick the bottom, and oil went below 0. So that's how we got stung. And that ruined our year, guys, basically, because we were doing all right. Well, I suppose January we weren't doing all right. But the account, we added a lot of money into the account, and it allows us to start trading stocks, because we'd only been trading currencies through here, guys, with the odd, you know, oil now and again, and silver and what have you. This is a training account, by the way, guys. We talk about, you know, what every single trade we take and we don't take, and the reasons why we take it, etc. And we do take chances in there. But we're now determined to to turn it round and start making some money. So the target for this year is 20%, guys. So we're okay. We're on target. So as I say, the drawdown, we went conservative, guys. We were taking 10% position sizes back here because there was only $500 or $600 in the account. So a 10% position size is $50, guys. So, you know, when you're running 10% position size, you get something wrong, and you really stuff up your statistics. And that's why we dumped 20 grand into it here to start trading properly. 100% in CAD Swiss, 79% pound US plug, 82% profitable, although the couple we got wrong. We did get it wrong a little bit. Remember it crashed. When plug crashed, we got caught up in that a little bit. I think it was like 2 or 3 trades. Oh, let's go back. Okay. And then our little chart over here. I don't entirely understand how this works out. Sometimes it makes you look really good, and other times it makes you look ridiculous because when it goes down, it drops like a stone, guys. But over the last, what is this? Current year, we've been doing well. If you take it out to 6 months ago, I suppose that's the same as current year, isn't it? 3 months ago, a year ago, still doing all right. If you go to 2 years, that's where it gets a bit sticky. Now, as I say, from around here, we're trading 20 grand. Oh, so we're around here. Here, we've been trading a $20,000 account. Over here, it was a so sometimes it was a $500 account, sometimes it was a $2,000 account. But as I say, it really makes it look ridiculous. Oh, that was the 6% in March last year. Yeah. Okay, so we're doing all right at the minute, folks. Right, that'll do for this. Remember, this is just the overview of the day, which I do every single day. And I do it for myself, but I explain it for you guys to let you know how I think. What I'll do now for the rest of the day is I'll go and I'll pick out those ideas. I'll listen to Bloomberg all day long, by the way. It's running constantly here, guys. And we'll make decisions about what, out of the things we've talked about, whether we're going to trade them or not. And then obviously there's the other side of the whole thing. If you go and look at the portfolio there, it's 90%. There's only that one currency trade on, guys. The rest of it's all stocks. So obviously I spend a lot of time in that as well. And I go over to here, change this to stopwatch, and then these are the stocks we're keeping an eye on as well, guys. And we don't run through them every day, guys, but whenever we are talking about stocks, individual stocks, we'll go look at the individual chart, look at the fundamentals, and then look for if we've decided fundamentally we want to get into it, then we look at it technically and decide whether today's the right day to get into it or not. So all of that we'll put some of that out in YouTube, and we'll put some out in Patreon. I'm moving away from my website, guys, because it's too out there. Do you know what I mean? It's a way out in the wee island on its own. You've got to draw people to it. Whereas YouTube and Patreon and what have you, that's where everybody else. So it's kind of coming into the fore. So I'm moving everything over onto Patreon, including all of the training videos, etc. Guys, we'll get it all on there over the next few months. Okay, that'll do for today. Bye for now. Speak to you all again later. Remember, if you like what I'm doing, you want to give me encouragement, please give me a thumbs up or even a comment, or what's the other one? Or you could subscribe. Okay, bye for now.